Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Friday, the 11th of February, starting with Bizant. And looks as though we've got a bull flag either side of the 200-day moving average. It's a sort of typical picture. We saw that recently in GCM Resources and other stocks. So that's around 0.19. Need to clear that 0.21 area, and then the target here up to the top of that post-June triangle as high as 0.27, perhaps as soon as the end of this month. This day generally really back below the 50-day line, around 0.15, really delaying the upside scenario. Wouldn't expect sub 0.17 really, given that we've got bullish divergence here. And a breakout through towards the 0.2 area. On to Empire Metals, which I think I might have covered even as recently as yesterday, but you can't get too much of a good thing, I suppose. Here we've got a situation where looks as though the shares have made a turn, positive turn. We had the bullish divergence there, bear trap as well from below the December support. So there's a sort of couple of decent trigger points there. And then today, the break of this resistance line or from November rather, just where the 50-day moving average is at 1.18. Above that, looking for the 200-day moving average towards 1.9, maybe as soon as the end of next month. Stock which doesn't have much of a chart, but you've got to start somewhere, is Future Metals. Here it's interesting that we've seen the stock gap up. That may be a factor of its liquidity, but it does look as though we've got a rising trend channel that you can draw from the start of trading here at the end of October. Top of the channel heading for 14 pence, which I suppose if you're in around the 9 or 10 pence area looks relatively attractive. But just the point here, really, the way that the 50-day line is rising, and we've gapped through that old November peak around 10 pence. So it could be the start of something positive. Moving along to Galileo, there was great news today, I suppose you could say. It's £2.4 million going the company's way. But on the charting front, we've got the September resistance line broken there at 1.1 pence, and above that we're looking for 1.9, maybe by, well, I suppose on a 2 to 3 month basis. A helpful event today would be, or a weekly close basis, above the 200-day moving average around 1.25. So that's the first trigger for the shares, and then after that hopefully we'll see an acceleration in the upside. Onto a stock which doesn't get much airtime, but here it is today, GreenRock. The interest here is that we're in this falling wedge. We've got the rising bullish divergence line there from beginning of last month. All we're waiting for here really is an end-of-day close above the October resistance line and the 50-day moving average around 6.35 pence. If we can get that over the next week or so, then we could be heading towards an end of March target as high as 9 pence. At the top of a broadening triangle from October. Obviously, new lows here would delay or change the picture, but with that bullish divergence line, hopefully that won't happen. On to Longboat, which I've covered a few times of late. What's interesting here is that we had the gap down, looks like an exhaustion gap. A buy signal, a technical buy signal, will come in the form of an end-of-day close back above the top of the gap. So that means that we're looking for basically 57.5 pence plus. If you're fussy, maybe you want to see that line of resistance from October broken around 60 pence, or the 50-day line at 62 pence. But the initial signal there would be an end-of-day close above 57.5. And obviously we don't want to see the shares make new lows there either. Lots of requests for Oilex, which I've covered quite a lot when it was just sort of breaking, just at the turn of the month, when it was breaking that line of resistance from April. Been very messy since, so basically in a sort of a random walk between 0.2 and 0.25. Did suggest before that we probably want to see an end of day or a weekly close above 0.25, 0.26, which we may get today. But for some reason, this is messy. It seems to have slightly confused the market. And even with that bullish divergence line there, still can't rule out another dip down towards the 0.2 area, but at least 0.2 looks like a relatively stable or safe entry point for those who like the shares. Got the rising 50-day moving average as well, so that should also ensure that we don't see any price action back below 0.2. We can get through that mid 0.2s area, the big target here up to 0.45. But at the moment, it's difficult to see how we're going to get a quick move up there, given all this congestion in the 0.2 to 0.25 area. Looking at Omega Diagnostics, which hasn't been the greatest chart performer of late. As you can see here, we had the gap down, which was really the killer for the shares, down through 40p back at the end of November. We weren't able to even trade above the floor of the gap at 35, which was obviously a negative. Since then, we've been in a falling wedge formation, which has had its moments in terms of potentially a breakout, but we had a gap higher, but that gain fell at the line there from November. Current situation is that we still have the risk of a move down towards 4 pence at the floor of the wedge, but otherwise it's all about breaking that line of resistance from the autumn at currently at around the 10 pence level. So a bit of a fiddly situation there. Probably if you're near to the market, the idea of trying to buy near to 4p and getting out near to 10p is the best idea on offer if you are keen. Going on to Okyo, which has been not the greatest charting situation here. We've had a couple of gaps up after breaking that line of resistance from the early part of last year, which was very encouraging. So from 4p to 8.5, but very illiquid and gapping down last month. The hope now for the bulls is that we don't make any new lows, which would be a great plus, and also that we bounced off the floor of that October gap around 4.9 pence. The longer we stay above 4 3/4, the greater the chance of maybe filling the gap up to 6.5 pence, but not again a great charting situation. The real hope is that the shares have made their long-term or near-term lows for at least for the last few months or the next few months on that situation. On to Premier, which probably gets the award for the most blue candles in a row, up days in a row as well. It's been sort of blue from the last day of January, so we're doing well at the moment. Broke out of that blue, what looked like a bull flag around 0.3 pence and above the initial February high at 0.33. We are justified in dreaming of a target as high as 0.6, maybe as soon as the end of next month. Eagle-eyed traders will notice that we're just delivering a golden cross between the 50 and 200-day moving averages at the moment, and that seems to be helping the situation, at least in terms of today's 10% share price rise so far. On to Predator, where I had a rather optimistic target, which from when the shares were, I suppose, around the 6 or 7 pence area, around the 200-day line. We've hit that line of resistance from July, and that's basically given us a high of 12 pence today. Was looking for 14 pence, which was support on the way down in June, and maybe we'll get that over the next week, especially while we remain above the existing low of the day around 10.5. So above 10.5, still get to 14 pence relatively quickly on Predator, so quite a relief there. Rainbow Rare Earths in focus on the basis of the latest gap, the gap that we had higher this week, bouncing off the floor of that rising trend channel from August. That's currently around 16.5 pence, and above that looking for 21 at the August resistance line projection. Just a couple of stocks to go now. First one is Tertiary Minerals, which I know has its fans, and maybe after today it'll have even more fans. We broke that line of resistance at the turn of the month around, 0.21. And after a bit of a jiggery pokery and a test of the 50-day moving average at 0.19, we are finally spiking quite well. The view here is that with the 50-day rising, with a bullish divergence line as well, we're looking for the post-June resistance for the shares up towards 0.36, 0.37, something like that, maybe over the next couple of weeks, certainly by the end of this month. This stage only really well below the 50-day line, 0.19, really delaying the upside scenario. Next up, a stock which was requested even before today's spike. So obviously somebody's got great psychic abilities. We have Vector Capital. Here we have initial target here was around the 71 pence area, and I suppose that's still valid while we hold above the neckline resistance there at 53. So above 53, looking for 70, 72. And if you're a fan of the shares and want to dream of the greater heights, then it's up to as high as 105 at that 1 year resistance line projection. So above, the key here really holding the 53 pence area on a mid basis, mid-close basis. That's it from me today. More updates over the weekend.